Okay, it's 12:30. Let's get started with today's webinar. Here we are on the charting platform. So kicking things off with the euro, unfortunately it's the most boring market out there at the moment. So one thing I wanted to say up front was that after a little bit of feedback, trying to switch the orientation of these webinars a little bit shorter term. So in essence, previously been looking at weekly and daily charts. I'm going to look a bit more at daily and 4-hour charts now, and occasionally probe down to the 1-hour chart. I think it's perhaps a bit more appropriate for the week ahead, and I think maybe a bit more aligned with the kind of trading most people are doing out there. So with all that in mind, so this is the daily chart for the euro. So you can see the kind of backdrop to what we're dealing with at the moment is that we're in this wider trading range. This obviously 2150 down being the kind of bottom of the range, and this 2550 being the top of the range. But we've had some interim lows in around this kind of 2240, you could call it. And so you can see this low here, we had a false breakout for a couple of days early April. We basically held the low with those false breaks, and since then we've popped to the top side. But still, nonetheless, we're in a range-bound market. We saw pretty much identical thing happening up here, where this was the high, and we had 2 days with a false break, and then we traded down. So all things being said, we're in a range-bound market on a daily basis. So it just means that the 4-hour trends or the shorter-term trends are a bit less reliable and don't tend to last as long. But the dropping down to this 4-hour chart, you can see that this is when we dropped down to that. This was the daily level, and here you can see the false breaks on the daily chart in a bit more detail. We got a break of this declining trend line, so you can see the trend had been very much down from the top of the range down to the bottom of the range, and then here we got a bit of a confirmation with a big pop through the top of the range, took out these highs here, and we managed to get as far as here. And now I wouldn't, obviously you can pluck things out that are kind of random, perhaps sources of resistance. I think probably the most solid thing is that it's just shy of 124, the round number, and so we've had a big pullback from the round number. And then respecting this 50-day average, 50-period moving average on the 4-hour chart has acted as some support. And now, as of today, as of today. We've popped out to the top side here, but so it's a breakout after a fair few 4-hour candlesticks here, but in the great context of things, it's hard to read too much into it. My feeling is that probably we do go up, take out this high and probe the top of the range again, but that's far from guaranteed because we're not really in a trending environment. So you assume downtrend from top of the range to the bottom of the range. We're assuming we're more in a kind of uptrending environment here to retest the top of the range, but it's not really a particularly solid trend. At least here, when we were pulling down, we were generally kind of respecting the 20-day moving average for the most part, and we didn't really see any higher closes above previous highs. Mostly it was lower highs, but here we obviously had a big drop through this swing low here, but we have respected the previous low, just a false break through it, and since then, so just a kind of bit of a deeper correction, a bit more of a pause for thought as to how exactly this uptrend is shaking out. So I think there's room to be bullish on the euro in the short term on this 4-hour chart, assuming we go up to retest the top of the range. But it's it's a bit choppy. It's an unreliable trend in effect. Much less the case in cable, been a very decent trend. You may remember last week I did point out the 140 level as support. Unfortunately, I was sort of saying that actually, given that we're in an overall range-bound environment, I wasn't actually so sure about getting into the market after we had this. I pointed to the fact that we'd had a false break through 140. I talked about the fact that we'd retraced all those bearish engulfing gains, and it looks like a decent pattern. So I talked up all the positives, but then said that actually we're in the middle of the range, and the odds are against it. As it is, we're on track for 7 days worth of price gains since then. So it's turned out to be obviously a pretty decent pattern, and we are literally looking at breaking out to multi-year highs here in cable. So the uptrend is not fully taking place in the on the daily chart yet. We're still kind of inside the range, but it looks good for breaking through it. And obviously, in the greater scheme of things, we are trending higher on this daily chart. If we drop down to the 4-hour chart, you can kind of see what we're dealing with here. So this is when we had the false breakdown through 140. We have obviously a nice rally up there, pulled back a bit from that old support, from that old resistance, and then we got the break to the top side, and we've been trending nicely above this 20-period moving average on the 4-hour chart since. This was quite a significant high where we pulled back for a few hours, broke to the top side again, retested, and then after hitting the if we go back to our daily chart again to get a reference point as to what this high is, it's these closing highs back here around 142.80. So we've pulled back from there, but come back to that short-term high on the 4-hour chart again, acted as support. Nice little pin bar / bullish engulfing on the 4-hour chart, and again another bullish engulfing here on a candle later, also an inside candle breakout, although I think that was is that the Sunday candle? No, that was early today, so to actually, 2 a.m. Yeah, so we're on a 4-hour chart, so I mean it was an inside bar nonetheless, and we've had a pop to the top side and obviously getting some good follow through, and we're over 143 now, so some resistance coming up above. Up at 143.40, but overall, we're in a nice, we're pointing higher on most metrics. Looking at these moving averages, the only risk is that we just need to break out the top of the range first. So may have to have some steeper correction from there before we can break out, but that would be good if we can get in at lower price levels anyway. Because at this point, since this trend's been developing, we're a bit late to the party. Up here, we know there's a good trend in place, but obviously it's a bit late, and we haven't had a kind of decent correction which has taken out the previous lows for a while. Only down here, and that was just marginally. We put in this low here, a little false break to the downside pop, and here we've held these lows. So trend is strong at the moment on the 4-hour chart. Just got that big daily resistance level up at 143.50ish. Moving over to dollar-yen. So this is the daily chart. And there's kind of a cluster of fairly significant levels here. So firstly, just that previous swing on the daily chart there. Then you can see these two levels here, which come in quite close to each other. And then if we go above there, we've got basically all these levels leading up to 108. Potential areas where the market could roll over, and we've seen the first sign of that from Friday, where we had this fairly soft looking pin bar pattern which still did close higher, so not that bearish, but first sign perhaps of a bit of weakness in this correction. We're above the 50-day moving average, so for that keeps me a bit cautious on short trades. But we are well below the 200-day moving average. So overall, we're looking for this market to roll over eventually, but it's looking strong at the moment while it's above that 50-day moving average. Looking at this 4-hour chart, you can see that we've put in a lower high and now subsequently a lower low. So at this stage, I wouldn't necessarily be selling the breakout here, and as you can see, we're already popping back above that breakout level because we are still trending higher on this 4-hourly basis. So until we break down through these 20 and 50 period moving averages on the 4-hour chart, and actually maybe start coming down and challenging these lows here, it's still on the short term kind of 4-hourly basis that the trend is still to the top side. So we're trending higher, but we're challenging these longer term levels, and we're just looking to see if those levels cause a reversal in this 4-hour trend, which would take us back in the direction of this kind of longer term daily trend. So obviously you can trade in the direction of this 4-hour trend, but it's been going a while now, and we're facing some quite stiff resistance, and we've had a marginal kind of bearish candlestick as of Friday. Switching gears to the indices, so starting with this this chart, I had mentioned this level based on these two lows over here, had the little arrow in, and we're suffering a big bearish candle as we speak on this big bearish engulfing, where we did open to the top side, and now we're looking lower in the FTSE. So a bit of a reversal pattern taking place at the moment, but similar thing where, on a daily basis we're in a range really. We can add here we can see we've pushed back above the 50 and the 20 period moving averages, but below that 200 still, and coming up to resistance from these highs and then these highs up here. So all this area is potentially where the market rolls over, and it's looking like it's doing so at the moment. So on this 4-hourly basis, you can see we've taken out the 20 period moving average. We've dropped below a little kind of trend line here, but this is still a reasonable enough correction within an uptrend. So you would expect the market to pick up again sometime before the 50 period moving average rally up, and it's only if we roll over through that low again, take out the 50 period moving average, where you can get a bit more confident that actually these longer term levels, this zone here is actually working as resistance. So first tentative signs here that these higher levels in the range in the indices are working. So just to reiterate, we are seeing some weakness here. We've broken down through this trend line, but still, I don't know if you necessarily want to go counter to this generally bullish movement yet. In fact, you'd imagine some probably sometime above the 50 period moving average, in concert with these highs here, which is not a million miles from where we currently stand. Actually, there might be some interest coming back into the market. So perhaps looking for a little pop before the market rolls over again, if this resistance is to hold. But it wouldn't be unreasonable to see a pop and then even come out and make a higher high, because we'd still be within this kind of resistance zone. Okay, switching gears to the Germany 13, so sort of similar theme here, where obviously we've held the lows on 3 occasions. And now we're rallying up to these resistance areas. So we've taken out this high here, so we're now up to this peak over here, and so this is kind of the zone that we're dealing with. And we didn't even quite get into this level here before the market started to roll back. So some bearish candles on the daily chart happening here. Obviously, haven't closed for the day yet, but bearish daily candles from resistance within the trading range actually sets us up quite well for potentially a pullback, a bearish pullback down into the range. So again, still above these above the 20 even in the DAX and indeed the 50. So can still call this a higher trend. It's a correction within a higher trend. But it's obviously coming off these higher levels where we think it could lead to a more concrete reversal. So what are we looking for that to happen? Well, I've just drawn this little line through here. It doesn't mean too much, but actually I think a pullback into that area with a failure to make a higher high and then a rollover again is something we kind of want to see. So that's probably something you'd expect to take place by tomorrow or Wednesday perhaps, is when we can actually see a bit more of a solid reversal in the trend. And again, pretty similar theme across the indices. So let's jump up to the daily chart again. You can see this was our swing high level here, and we've reversed. Wall Street obviously leads the other markets, so we're a bit of a false break. Tried to closed the day higher on Wall Street, and then all the banks which had actually reported some quite decent earnings, they actually ended up leading the declines. And so a bit of weakness coming through from Wall Street, and obviously came from a confluence of not only that old high, but also the 50-day moving average. But yeah, same thing I've been saying in these other charts. While obviously it's reversed from that resistance area, still price generally kind of trending and finding support in this kind of 20 to 50 moving average rate area. So we had that big sell-off, but we've bounced from the 50 period moving average on the 4-hour chart. So still room to trend higher here. So that's why it's still a bit early to look for this market to be rolling over. We haven't quite got the confirmation yet. We want to see it roll over really through these moving averages and see the moving averages roll over to the downside too. Switching gears to gold, this is another very tricky market, just because it's pretty range bound. We keep looking for the top side breakout, not quite happened yet. So another big reversal last week from the top of the range. Was quite hard to catch down on the shorter term time frame charts. You can see this was kind of the previous resistance. So we came back down, bounced off that resistance from this high here, which happened in this candlestick, and then over the course of the next few hours we eventually broke it. And so that, with the benefit of hindsight, could have been your trigger to enter the market. There weren't really any clear-cut trend line breaks because of the sharpness of the reversal, not on the 4-hour chart anyway. So the trend line reversal would have happened quite low down, and so taking a trend line break like this, on the benefit of hindsight, worked out okay at 8 hours worth of downtrending action before we popped up again. But obviously it's already dropped a lot by the time you got that trend line break. It's a bit nicer when you have something happening closer to the top, normally with some sort of like another bounce up here, with some sort of failure pattern taking place. But we didn't get it because it was just a big sharp drop. So now as we speak, obviously that same level, which was the high here, and then we've got the bounce there, we're back to it and it's acting as resistance. So if we do get a break to the top side on the 4-hour chart, that could be a sign that this correction is actually over now, and we're resuming another attempt at the high, and still aiming for that big long-term breakout on this daily chart from this price pattern, consolidation pattern that we've been in. So there's not a trending environment, but I'm looking for signs that we're going to re-challenge the top of the range. Obviously, based on that bearish price action, the counter is that we've come back up to what was support, got broke, now being tested as resistance. So we can look for some follow through to the downside as well. It's just that we've got those moving averages supporting, and the fact that it's a bearish market, you can't trust those patterns. It's a range bound market, so you can't trust those patterns quite so much. And then last but not least, on to Brent crude. So we've got the daily chart here, and this has been one of the more exciting markets. Again, one that I was very close to calling last week. I was calling for the an aim to this, calling this a correction, looking for the pop to the top side, but I was just too conservative. So if you remember, I had this trend line in here, and I was looking at kind of more like these levels down here as to where the market could get to find value, and it never quite did. So one of those lessons in being too conservative. If you want to kind of see why, if you do pull out to this weekly chart, you can kind of see that, well, okay, here are those weekly closing levels. We came back, tested the weekly closing levels, and then popped straight from them. So, the market's actually acting quite an orderly fashion, pullback, up to a level, higher low, made a higher high, pulled back to the old high, rallied again, and, taking out the highs. So it's all quite orderly, again, with the benefit of hindsight. Now, as we stand, we're pulling back, we're testing back to this little area of support. For the moment, we've pulled back into it. With a drop here, we have taken out the 20 period moving average, and we've taken out a little trend line here. So wouldn't necessarily be buying bullish pattern straight away. Ideally, what you want to see is something along. You ideally want to see some sort of pattern like this, where it kind of pops up. Comes down and then breaks to the top side again. It's kind of ideally what you want to see. More like this kind of action after we've taken out the 20 period moving average. It's a sign of a kind of deeper correction. It is from a longer term level. So obviously after this kind of big reversal, kind of something of a double top happening from here. So we're down at the double top's neckline. Sign of a false break maybe at the moment, or or just it's holding the bottom of the level. So support potentially coming in here at 70, 80, but ideally we want to see some little pop drop and then a little kind of ABC, as I mentioned in one of my my other matters, where we get the A, B, C to the top side is ideally what we want to see now that we're below the 20 period moving average. Well, I hope that all made sense. I hope that was useful. And just going to finish off here. We've got a question here just about just with regard to the Syria attack. Well, I think my reading on the Syria attack is that Wall Street sold off on Friday because it could have all gone a bit horribly wrong. Who knows what the response from Russia would have been to all those missiles going into Syria, where obviously they're supporting the government. And they could have gone a bit more aggressive in the targets they went for. But I think the general take is it was all a bit for show. No Russian troops got hurt reportedly, so that just matters from a kind of escalation standpoint. So it hasn't escalated, basically, I think is the reading here. So market's fairly calm about it. And yes, the other part of the question was looking on to US retail sales. I think the retail sales, as well as we've got a couple of Fed speakers later today, they'll probably be some of the key drivers for the forex market, rather than that kind of geopolitical sentiment. But of course, we've got to be on our guard for any kind of tweets from Trump or official comments. But I think a bit of a theme from last week, something I wrote in one of my market reports, was that actually people are getting a little bit fatigued with the ups and downs of the Trump Twitter account and paying less attention to it, actually. So it's not hindering markets as much as it once was. I mean, European stocks have closed higher for 3 weeks in a row, despite all the supposed geopolitical uncertainty. So I'd be paying more attention to the fact that we're near the top of these ranges in equities. So we're either looking for a decent breakout to the top side, or we're looking for these ranges to hold. And we're seeing the first signs of that today. And then in currencies, obviously euro's going nowhere, but pound is breaking to the top, so we're looking for continuation in the pound to really get the trend going. But after 7 days higher in a row, obviously you're looking a bit overstretched in the pound as well, so risk of that pulling back into its range too. All right, thanks again everyone. Good luck with trading for the rest of the week. It's Jasper signing out.